broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. Middle of the week. It's a Wednesday morning. We are, of course, waiting and watching what the market wants to do next. Is it starting to enter a bit of a corrective phase, or is it going to be ranged action? That's the big question this morning. I'm Prashant. With me, my colleagues Nigel and Surabhi is here with us today as well. Guys, hi, morning.
Morning, gentlemen. And, I was thinking about this yesterday. It's like this one step forward, one step backward market. One day up, one day down. And even yesterday, when we were coasting along quite nicely till about 2 o'clock, then the volatility kicks in. Suddenly, you're down 100 points. Not just us, but even the US markets. I think we're really searching for direction here.
Well, today we'll go according to market as well as global cues. And from tomorrow onwards, we're on to earnings as well. So at least we get some bit of a cue that's coming in from the past quarter's numbers as well as the commentary that will come in from there. So IT will be in focus.
I think absolutely. And, there's no help from banks.
Yeah.
So far yet. I mean, people have been bullish on banks, but nothing happening
this whole big, long bank trade, the big rise in banks, where is it? It's not visible.
It ain't working yet. And, of course, IT is the other big one. So banking is not working. Let's see if IT can deliver something. Hopes are low. We had Kawaljeet Suluja from Kotak yesterday telling us that, numbers should be better from the next quarter, but F5... he still expects downgrades to street expectations.
Yeah.
So the street is ahead, stocks have rallied, but numbers perhaps will not match up.
You know what stood out for me in that chat that you folks were having with Kawaljeet yesterday was that everybody is waiting for the management commentary to give a hint that the worst is over. He said, don't even wait for that. You'll not get anything from the managements this time. So I guess it's a wait and watch for now.
To be fair on the banking names, actually, we had that big rally from the start of December. We moved from around that 45,000 odd mark to around 49,000 odd. And we seem to be losing our direction in the last few sessions. So let's see whether or not that 47,000 odd can hold out. The problem yesterday was we broke some crucial technical levels. So that nifty bank, that needs to come to the party. The bulls will be hoping and praying for that.
Absolutely. So I'll just quickly tell you the global action, because the global action is not looking all that great. The hotboard should come up on your screen. The S&P, nothing very much. Actually, there is no clear takeaway from the US action last night. The Dow is down, the S&P is down, the Nasdaq absolutely flat. And, the small cap index, the Russell 2000, was down almost about a full 2% or so. So the question really is simply this, with the market on the Nifty and especially on the Bank Nifty, starting to look a little weakish, are we entering a bit of a corrective phase? Or are we going to be in this 200-odd point range, especially in the Nifty, 21,500 on the downside, 21,700 on the upside. So those are the big questions to ponder. We'll get you the F&O data and other stuff in a bit from now. But why don't tackle the global bit, which is, I think, best addressed with a veteran. Adrian Movat is with us, investor at Hong Kong SAR. He's joining in. Someone who's seen these cycles and markets for a long time. Adrian, great to have you with us here. Thanks very much for your time. Happy New Year. We're talking for the first time in the new one. How are things looking, Adrian? Is there January seasonally, at least here in India, and we looked at data going back the last decade and a half, is weaker. And we've never had an instance when November and December have been so strong as they were in 23, and you had a strong sort of January the next year. So there is seasonality perhaps which is working against us. But otherwise, how is the price action and fundamentals looking?
So, I think it's reasonable that markets are having a bit of a breather, consolidating. So you're not getting any clear trend in looking at the day-to-day movements in markets. And let's be conscious about how much equities have rallied since their October lows, and also how bonds have rallied. In particular, yields dropping back to the 4% level. So I think the markets at the moment should be consolidating and thinking about, what are going to be the major events in 2024. And I will go back to the bond market. There was an interesting comment from Bill Gross the other day, of ex-PIMCO, highlighting that bonds are overvalued at 4%. And I do think that one of the potential catalysts for a correction would be people saying, okay, the US economy is going to continue to grow this year. We're probably not going to get rate cuts in the first half. and that it doesn't make sense that the yield curve is so inverted at this point in time. So I think investors should be conscious about that, but it's against a backdrop of what I suspect is still going to be another good year of economic growth.
Adrian, hi, good morning, and season's greetings to you. You know, when we started the year, at least the narrative was extremely positive all along. I mean, we were looking at rate cuts in the US, possibly a soft landing, and, continued momentum in the economy here in India. Do you also see it that positively? Because in terms of price action, markets are obviously, they have, a lot to question as the year rolls out. Are we looking at pretty much this perfect setup? Or, is there perhaps a risk element that markets have ignored?
So I think there's a conflict between, phrases like soft landing and the Fed cutting early. I'd rather say that, look, the US economy is not landing. It's going to continue to expand, maybe not as robustly as it was in 2023. And if that's the case, the pressure on the Fed to cut rates is quite moderate. And bond investors need to reflect on how extremely inverted the yield curve is. So this, to me, is really the threat that causes a correction in markets. But I view it very much as a correction in a bull market rather than the start of a bear market. So go back to it. If you believe in a soft landing, which is that the US economy doesn't go into recession, then the yield curve should not be inverted.
So in terms of, just to, follow up on that, what would be a realistic expectation from the Fed? The Fed said 3 cuts this year. I think markets in December jumped with joy, expecting 6. And now there's some reality, pricing that's happening. What would you reckon would be perhaps a base case for this year in terms of rate cuts that would keep the market happy?
Yeah, so maybe we finish the year between 4 3/4 and 5 on Fed funds rates, with the cuts being very much back-ended. So follow the dots from the FOMC committee meeting, not the over-exuberant futures market.
Hi, Adrian. Morning. Good to see you. And Nigel on this side. Well, how do you approach a market like India? We have been rank outperformers, plenty of positivity with regard, to leadership at the helm. We also have a decent amount of flows that came in the past 1 month or so. But at current valuations, what would your approach be to an emerging market like India, which, mind you, offers very, very good earnings growth, but valuations could be a hurdle?
So the story of 2023 was to run your winners, and India was the winner within emerging markets. Now, its core positioning that is very favorable towards India. So if you look at the ETF flows, the net flows into Indian ETFs are much greater than the flows into any other emerging markets. And some of the major emerging markets like China have seen outflows. So I think valuations and positioning, continue to be a negative for India. So if I look at the MSCI forward PE, it's just below 22 at this point. That said, the Indian economy is definitely a winner within the emerging market space. You've got the highest level of economic growth. You've got, an inflation dynamic that is manageable, the potential for slightly lower rates. I don't think that the election this year is a big event for capital markets. The assumption is a continuation of the current government. So I think it's still a story of run your winners for now. I think if India was to see a period of underperformance in EM, it would really have to be a dynamic that something happens in China that breaks this very protracted bear market. Now, clearly, if that event was to occur, then it would put quite extreme pressure on EM funds that are very underweight China and overweight India. Sadly, at the moment, I'm struggling to find a reason to turn aggressively bullish on China.
The prices down and out, not reason enough, right? You need more in that sense. Just one thing, for the Indian metals space, which is a global globally exposed cyclical space, and China is a big mover there. Do you think hope still lives, especially for commodities like copper, etc.? China will try and do more, right, to stimulate. And one of the channels through which it feeds in is copper. And I mentioned specifically copper because there is also the renewables transition story, etc. Any thoughts at all for commodities as a space?
So just an observation, China's putting in place public sector stimulus because the private sector is weak. And the real focus of that is the property sector. Now, you've got another help in the property sector for now from the government. So the government's been very concerned about social unrest because property developers have taken money from households and they haven't delivered the apartment. So their real focus is to get those apartments finished and delivered to those that have paid for them. And that temporarily, I think, is holding up commodity prices. If you look at the market, it was down a week again in Hong Kong. It was due to very, very weak property sales. So I think that people are a little bit too complacent about Chinese commodity demand. It's because the property developers at the moment are delivering those units. They're using the commodities, including copper, but they're not making new sales. And I think you're going to, trade into a vacuum of demand at some point this year. And that will obviously hit iron ore more dramatically than copper, because as you highlight with energy transitions, there are many other uses for copper. And also the copper price has really been too low in the last couple of years to encourage meaningful new capacity to come on stream. So I would favor copper over other commodities, but I would imagine that if you do get a China-driven correction in commodities, then the whole complex sells off and you look to add to copper at that point. But I would be very cautious about commodity demand, and it's back to the whole dynamics of the Chinese property market.
So complete opposite to what we're witnessing here in India, Adrian, where all of these premium plush houses in Gurgaon and Mumbai, they're flying off the shelves even before the launch period is over. Pre-launch days, apartments get sold out in like 2-3 days flat. Which brings me back to the question, what do you see as the big trade in India? Will it continue to be what we saw in 23, which is PSU stocks and industrials and capex? Could it be something different? People are waiting for the big Indian banks to take off in a meaningful manner, but we're yet to see a consistent move there. What's your bet?
Yeah, it was interesting. The financials trade was very weak in India towards the end of the year relative to what we were seeing in European and US equity markets, where there was quite a strong rally in the major banks. My bias would be to be in the banks as an overweight position as an underperformer. And the underperformance of the banks, I don't think was necessarily justified by the fundamentals and the earnings growth.
Okay, all right, Adrian, final question before we let you go, since we just briefly spoken about banks. What about tech? You have the IT earnings that kickstart tomorrow here in India, and that's the other pillar of our markets. What's your view? Because the global markets, global economies itself could be in a bit of a flux, but some of these stocks are still holding closer to the higher end.
Yeah, I still think the tech story is one you want to be long in a global portfolio. And, within India, the Indian tech companies have underperformed global tech quite meaningfully. And I think look attractive within the global context, whether that's an all country or just an EM portfolio.
Okay. Got that, Adrian. Thank you very much for, sort of that detailed picture of what you make on global macros more than anything else, and of course, a bit of individual markets as well. That's Adrian Mowat, long-term investor, emerging market sort of analyst, investor, and who's watched India pretty closely as well. There's some more opinion that we got from David Zervos, Chief Market Strategist at Jefferies. He speaks about the current inflationary trends and its impact in the US economy. Listen in.
And I think the market's going to key off that in a positive way as well. I'm pretty positive coming into this year. We were positive on the high yield markets. We didn't want to make it all the way to equities last year just because we felt the Fed still had work to do. The equities did great anyway, and I think that's because inflation came down faster than most had expected, including us. But I think now you can really move into the riskier parts of the capital structure of the U.S. economy and feel like you've got a friend again. a friend in Jay Powell. He doesn't have to beat you up on this inflation stuff anymore, and that's great news.
On IWM, which is the small mid-cap Russell 2000 proxy, we really saw sentiment go out of the ballpark, incredibly bullish to the point where, kind of the normal dynamics of options, which is that downside hedges should be a little bit more expensive because folks need insurance, had actually gone negative. We've seen that dramatically reverse. So again, it's not that people are starting to hedge IWM, but that really bullish sentiment has waned. So it could be an inflection point here from the rally we had beginning in November. We're really seeing that sentiment wane, not just on IWM, but also on the Mag 7 as well, in terms of that bullish sentiment really starting to wane.
All right, that's some perspective on global markets. We will take a break on that note, come back on the other side and put the spotlight on individual stocks that could be in focus today. Our top 10 list after the break.
Yeah, Ajay, look at your dad.
Welcome back. Wednesday morning, and we're looking at all the stocks that you should focus on today. Our team is standing by with the CNBC-TV18 list of top stocks to watch. Well, let's start off with what else but Vedanta. Now, Nigel, just the other day we thought they've done some restructuring on the bonds and it's a breather. And now one of the rating agencies goes and downgrades them.
Well, that's right.
What's happening?
Moody's has gone ahead and downgraded Vidanta Resources rating on both their corporate family rating as well as on the senior unsecured issuers. Now, they have maintained the negative outlook on the company, given it's considered poor quality with very high credit risk. That's what they're saying out there, and that's why the rating has been downgraded, which is up for you on the screen. Moody's view is that the recent restructuring as default avoidance, and they say the near-term liquidity will improve very slightly. The reasons for this downgrade is that Vedanta has unsustainable capital structure characterized by high financial leverage at the holding company, with weak liquidity amid large negative free cash flows, and they state that the company will face material liquidity issues over the next 24 months. That's the reason that they believe that the default risk continues to remain high. So put all this together, well, maybe a bit of a negative take because Vidanta Resources is getting downgraded. But I'll tell you what will be. The street is a buzz that maybe Mr. Anil Agarwal has a plan. So if he has a plan, we'll have to hear about it shortly. For the time being, because of this downgrade, expect the stock to be under some pressure.
Okay, all right. That is Vedanta. We'll watch out for this one. Well, earnings season has kicked off, and the first stock we're looking at from an earnings perspective is actually Delta Corp. And Manglam's here. Manglam, here it seems the chips are not adding up.
The chips are not adding up. In fact, people aren't gambling even in a season because you have poor results. This is the peak season quarter for Delta Corp. Third quarter, usually December, Goa, we talk about all those crowds, but revenues are down 15%. And because it's a high operating leverage business, the EBITDA as a result of which down 45% and the net profit is down 59%. The key culprit on the revenue has been the casino gaming division, where the revenues have declined by 18% and the operational profit has nearly halved from same time last year. Online gaming as well continues to be sluggish, 9% decline out there, even as it makes an EBIT loss. And hospitality, everyone's talking about great trends for Indian hotel companies, etc. That business has grown just 8.5% on a revenue basis and not so much from an operational performance basis as well. Delta Corp has been an underperformer and there have been a lot of regulatory issues. The company, however, says that they haven't made any provision yet because they're pretty confident of going through with all these regulatory issues, and they will fight for it. For now, see the stock in the red, largely because of weak fundamental performance.
All right, Mangalam, thanks very much for that. Let's bring in Sonal now. She's standing by. Polycap, there was some signs of life towards the end. The stock recovered, but then ended lower, pretty much at the low point of the day. There was that sort of alleged tax evasion, etc. But Polycap, the company clarified later to the exchanges. Sonal is here with more. Sonal.
Well, yes, just to give you some context, sources had suggested that there's been some tax evasion at Polycap's offices. An IT department claimed tax evasion of 200 crore rupees and detected 250 to 300 crore worth transactions booked in promoter accounts itself. but they did clarify to CNBC-TV18 first, and we did speak about it yesterday as well. They denied any reports of tax evasion. They have not received any communication from the IT department on this outcome, and they had responded to clarification and details sought by IT department after the surge that they had made. And this is something that they have reiterated in the exchange filing as well, where they say there is no tax evasion by the company. They have fully cooperated with the IT department during the search proceedings in December 2023, and also they have not received any communication after this search, and no idea of seizure as well. So this is a clarification that has come by. Let's see which way things go and how does the street take this clarification, because there was a big fall in the stock price yesterday.
Okay, all right, Sonal, let's see how Polycap plays out today. Thank you for that. Up next, I'm going to put SpiceJet on the radar because of an exclusive story that our colleague Danish brought in yesterday. This was post-market hours. It seems that there's a lot of interest among equity investors for, a fundraise that SpiceJet is looking at. There's a AGM today, and SpiceJet is going to be seeking approval to raise 2,250 crores. Now, Carlyle Aviation is already an investor in SpiceJet. They hold 7% equity. And what Danish is picking up is that they are very keen on seeing further expansion of the airline. And there was perhaps a meeting of senior Carlyle executives with Mr. Ajay Singh as well. So that's a positive sort of buzz that surrounds the stock. Not just this, SpiceJet has also made its interest very clear in bidding for Go First and getting more planes up in the air. So looking at, a big booster shot for growth and a fundraise to support that. So that's a stock that's going to be in focus as well. Let's move on now and look at some pharma names that might be in the news today, might be, active. Ekta is joining in for that. Ekta, morning.
Morning. Well, I'll start with Lupin. I expect a sentiment positive there because they are launching an ophthalmic product in the US. They've already received approval for it, Bromfenac ophthalmic solution, but they have exclusivity on it. So they have a first to file status. They have 180-day exclusivity on it. The market size is $182 million. So we could see maybe some amount of further momentum on the upside for Lupin just because of the launch. Remember that they've already received US FDA approval earlier. JB Chemicals, they did present at the JPM conference, which takes place every year. A couple of key points, FY27 targets include increasing their Indian pharma market position, productivity improvement of 12 to 14%, increased contribution from chronic therapies by FY27, and the CDMO business revenue, they are targeting over $100 million versus around touching $30 million by first half of FY24. So they're expecting a huge scale up in these two segments, which is chronic sales as well as in the CDMO business. Also, for the near term, the company is approaching zero net debt position as of December 31st, 2023. The operating cash flow stood at around 421 crores in first half of FY24. We know those things, but the FY27 targets, the kind of positive comments which have come in from JB Chemicals could probably drive the stock higher.
Okay, that's something to watch out for on the upside. Ekta, thanks very much for that. More stocks with news flow. Vivek is here with that list. Vivek.
Well, good morning. Quite a few stocks on the radar. First on my list is PFC. So now the company has got a no objection certificate from the RBI to set up a finance company in GIFT City, Gujarat. It'll be interesting to see how this particular company aids PFC for further fundraising activity, especially from global investors. Second stock on our radar, again, ONGC. The company is planning to set up a global treasury center. This is again at GIFT City in Gujarat. Now, the company expects to efficiently consolidate its funds available with the group in various countries, and also expect this particular entity to raise funds from the overseas entities. Now remember, ONGC has set a target of producing 40 million metric tons of oil and oil equivalent by 2040 from overseas assets. Keep an eye out for KIOCL as well, a temporary setback over there. The company has suspended operations of a Mangalore-based pellet plant with effect from January 9th. This is on account of non-availability of iron ore fines. And lastly, keep an eye out for Z as well. Lot of news flow yesterday. The stock was extremely volatile. Company has clarified to the exchanges saying that, they are committed to the merger with Sony and continuing to work towards a successful closure. This came during market hours yesterday. Also, reports indicate that the company has missed a payment deadline of $200 million to Walt Disney. This is for cricket TV rights. And along with that, yesterday in the block deal data, it has emerged that Society General net sold close to 78.5 lakh shares in the company yesterday. So expect the volatility to remain. The stock is now out of the F&O ban.
Okay, Z, always in focus, and that's fresh sort of negative development. That's reports indicating payment miss to Disney for cricket rights. Thank you, Vivek, very much for that. So those are all the stocks that we'll watch out for today. Need to take a quick break on that note. On the other side, we'll discuss these and more with Deven Choksi, MD at DR Choksi FinServe. Talk about some fundamental ideas for today.
Welcome back to Bazaar Morning Call. Well, let's focus on the next big event that we have our eyes set on. Less than 3 weeks to go for the interim budget, and sources tell us that the government may rejig the existing Farma PLI scheme. An announcement may be expected in the budget. Timsi Jaipuria, she joins us to fill us in with what we can expect. Timsi?
Well, sources say government is soon likely to rejig the Farma PLI scheme, and as per the rejig plan, the government is likely to include new drug raw materials to allocate the unused 1,655 crore rupees. The new active pharmaceutical ingredients, key starting materials and drug intermediaries are likely to include vitamins, anti-diabetic and anticoagulant drugs. Sources further say that the proposal is likely to be soon taken up by the cabinet and reallocation will be part of the interim budget. The move comes on the back of the fact that as many as 8 APIs, drug intermediaries and key starting materials could not find any takers under the existing scheme. Remember, government had earmarked 6,940 crore rupees for Farma PLI. Until now, funds allocated are 5,285 crore rupees. Now, the list of key starting materials, drug intermediaries and APIs with no takers include erythromycin, neomycin, gentamicin, ciprofloxacin, etc. So let's see how soon this proposal finds its feet among the Union Cabinet and, yes, finally at the interim budget. Back to you.
All right, Timsi, thank you very much for that. Speaking of, budget-related pleas or possible changes, here's a CNBC-TV18 exclusive. The Department of Industrial Policy and Promotion is batting for lower GST on hybrid cars. Sources have said that the Heavy Industries Minister has been asked to bridge the gap with the electric cars, which attract 5% GST. The cess and GST on hybrid cars currently stands at 43%. Parikshit has more details. Parikshit, of course, I mean, this has to go through the GST Council. It's not really a, something that can be routed through the budget. But in any case, what are you picking up?
Well, this seems to be the first time when there is some strong movement in the direction of rationalizing the GST structure on hybrid vehicles. For many years now, car makers like Suzuki and Toyota, who have hybrid technology, hybrid cars in India, have been requesting for a reduction in the GST rate on hybrid vehicles, which is 43%, which is 28% GST as well, and around 13 to 14% as cess. They want it reduced to about 18%, considering the tax on electric vehicles is just 5%. The companies have been saying that these are fuel-efficient vehicles, they reduce emissions as well, and therefore they must have a better tax structure, because the ICE vehicles carry a tax structure of around 48% if you look at GST and cess together. So the Heavy Industries Ministry is now looking at this proposal. They are holding industry consultations, and some officials believe that there is a case to reduce the GST on hybrid cars by some amount, definitely, and a proposal to that effect will be formally made to the Finance Ministry. A decision will have to be taken by the GST Council. It doesn't look like it will happen anytime soon, but the fact is, this is an important letter which has gone from the DPIIT to the Ministry of Heavy Industries, urging them to consider rationalizing the GST structure on hybrid vehicles.
All right, Parikshit, thanks very much for that. So that's, stories from Delhi, which we will continue to get to you with regards to policy and more. But today also, of course, is the day when the 10th edition of the Vibrant Gujarat Summit gets underway. Lots of focus, lots of interest, lots of energy, and lots of big faces, which will be sprinkled starting today, of course, with Prime Minister Narendra Modi and many others over the course of the next 2 or 3 days. Focus will be on sectors like renewables, defense, financial services, and many more. My colleagues Yash and Jude are at the event to tell us what to expect over the next few days, next 3 days to be precise. Guys, hi, good morning. Good to see both of you there in Gujarat, on the ground, reporting on this very big event. What should we expect?
Well, Prashant, good morning. So, of course, the history goes as, barely 2 years after the worst of the crisis hit the state of Gujarat, Prime Minister Narendra Modi, who was back then the Chief Minister of the state, invited global investors to the state through the first edition of Vibrant Gujarat. Now, fast forward 20 years later, the 10th edition of Vibrant Gujarat is all set to kickstart today.
And what a journey it's been, from all of 76 MOUs back in 2003 to a total of 28,361 MOUs in 2019, the last edition of the summit. It's been quite the growth so far. Even to put this in perspective, the GDP of Gujarat grew from 1.42 lakh crore rupees back in 2003 to a whopping 22.61 lakh crore rupees in 2023. And in this time, the total investment netted in just a couple of years has been a little more than 23 lakh crore rupees. So that puts things in perspective really with regard to how much the summit has grown in the last few years.
Well, absolutely. The focus for so many years of this summit has been, of course, on traditional sectors, be it pharmaceutical, food processing, textile, diamonds, financial services. But this time around, it'll be very interesting because new sectors will get fair bit of attention. These include renewables, green hydrogen, semiconductor, even electronics, some of the very new sectors, but of course loud noise around these sectors in terms of investment interest.
Right, and top business honchos as well, from the likes of Mukesh Ambani, Karan Adani and Chandrasekaran, B.V. Goenka will be here at the summit, even as top global leaders like Toshihiro Suzuki, AP Mollers, Keith Swenson, and of course Micron Technology making that big ticket investment in semiconductors. All of these will throw their hat into the investment ring.
Well, Jude, another special thing as far as this year's summit is concerned is there are multiple bilateral meetings and seminars between countries. Of course, to talk about geopolitics, supply chains, businesses between countries. And in the last 2 years, we've realized how much geopolitics really play an important role when it comes to global supply chains and businesses. So that will be a very important aspect as far as the summit this year is also concerned.
Right. So over the next couple of days, expect a host of discussions surrounding big ticket investments, a lot of planning and talk over global supply chains, the economy at large and geopolitics, even as a host of MOUs are all set to be inked between top industry leaders and the government of Gujarat.
Okay, all right, gentlemen, good to see you there, and that's a nice little curtain raiser to the action that lies ahead. Thank you very much for joining in. You have a busy day, and keep us updated. We'll keep coming back to you as more and more of those high-profile MOUs are signed at Vibrant Gujarat. Well, it's just after 8:30, so good time to get that promised fundamental conversation going on the stocks that you need to keep an eye out on. We have Deven Chokshi with us for exactly that. Deven, good morning. Good to have you with us. We want to start off with, some of the names that have been in the limelight recently because of slightly unfavorable news flow. Now, I just want to throw this one at you in case you've had a look at Polycap, dream run on the stock. I mean, no one's denying the fundamental opportunity and, but it's just this development around some, IT issues that has led to correction. How would you look at Polycap and that related space? Because it does have, a fair amount of competition as well right now.
Yeah, Survi, good morning. Well, I think two things will have to be looked at. No denial of the fact that the fundamentals of the business and the company remains extremely strong and convincing. Be it Polycap or be it, other peers in the segment, they all are having maximum time as I would call them as, because of the larger amount of participation happening from the building material segment businesses, where due to the large amount of constructions happening around, these companies are having favorable times for the products that they are having, including the electrical cables and among others. So there is no denial of that particular fact either. However, our markets have priced in everything today. Whatever the good possibilities that you are having right now, be it for current year, be it for next year, or be it for year thereafter, most of the stocks are completely pricing in this kind of opportunities. Any negative news or any reason or any kind of a news which is not negative, but at the same time, it's only, a rumor, In such situation too, I think the market has no ground to basically hold this kind of valuations, and that's where you are going to see the challenge. This is not only for one company alone, but I think most of the companies in the marketplace where there is no chance for anybody to make a mistake or for that matter see any kind of negatives. I think this is where probably one will have to remain more concerned about. Maybe the investigation on this allegation part, on the Polycap, will get answered at some point of time, and that is where probably one will look into it with a favorable answer coming from the management of the company. But the fact remains that at this point of time, the stock would probably halt the rally because of the negative news flows which are happening in the marketplace.
Okay, just want to point out, by the way, we just had that news flash from Paytm. They are looking to invest 100 crores in Gift City in Gujarat and looking to start some sort of cross-border payments based out of Gujarat. We've had a slew of announcements on and around Gift City. Lots of companies setting up. Remember, there's PFC that sort of gave a release to the exchanges on this yesterday. ONGC, lots of PSUs, even non-PSUs. Big beeline for Gift City in the works. So I guess the International Finance Center over there is really kicking off, and it's kind of tying in all these announcements with the vibrant Gujarat summit. So it's all eyes on Gujarat.
Indeed. Let's see how that works out then. But Devin, let's discuss a few more stocks then. Let's talk about Vidanta. You have the parent that's again got another downgrade, Vidanta Resources, coming in from Moody's. They believe that the risks are still high in terms of default. At 260 rupees, what's your view? I recall when the first time around we were talking about these defaults was around 3.5 months ago. The stock had gone down to 210. But from there, it's up close to 20%. So the street is still hoping something will come about. Your view?
So Nigel, good morning. Underlying business condition remains, pretty strong for the company. There is no second thought on this particular subject. Be it, ferrous metal, be it non-ferrous metal, the business condition remains absolutely strong and convincing. At the same time, the input cost, energy cost prices are down, and as a result of which, it promises to give you the margin, which otherwise, would always be a challenge for most of the commodity companies in a rising crude oil scenario. Here, the situation is favorable on demand front. The situation is favorable on the margin front. As far as the group and the outlook is concerned, I believe, their restructuring process is going to take away a good amount of time for them. Next 1.5 to 2 years probably, would be spent mostly in completing the restructuring process of the group, which they have announced. Once that particular process is through, then possibly one can look at afresh as far as the group and the business is concerned. At this point of time, though valuation-wise the companies are remaining attractive, one will have to look at very clearly how exactly the restructuring is shaping up, how exactly demerger is taking up, how exactly the companies which have basically lined up those business activities would eventually get into them. So to that extent, we will have to wait and see for some time.
Okay, that's Vedanta in the spotlight today. Devin, hold on. We want to discuss two-wheelers with you, specifically Bajaj Auto. That stock's been on a tear. There's so much of positive news surrounding it. It again crossed that 7,100 mark, at least intraday yesterday. The board has approved a 4,000 crore rupee buyback. The price of that buyback is 10,000 rupees per share, substantially higher than the current market price. We caught up with Dinesh Thapar, the company's CFO, to talk about the rationale, the pricing, and really the road ahead for the company. He sounded extremely optimistic. Take a look.
Essentially about 4 million shares that we are looking to mop up as part of this buyback. It's about 16% of our paid-up share capital and free reserves, and therefore this is subject to shareholder approval, and we'll run through that process between now and the middle of February. We reflected on this and had an extensive discussion at the board, was to really use this as an opportunity to reflect on our performance over this last little while, which has really been quite compelling and really outperforming in terms of the broader industry. Will not end up diluting because we think, with the current pricing that we've put out, it presents a very compelling proposition for investors and shareholders to really make their full entitlement. And therefore, if that was to be the case, the promoters will tender in line with their entitlement. To that extent, I expect post-buyback shareholding for them not to be diluted. In fact, it might creep up slightly because we've also got a 15% reservation for small shareholders over here. So when you do the maths on a post-buyback percentage, the promoter holding, assuming everyone tenders in line with their entitlement, should be at about the same levels or a tad higher.
That is Bajaj Auto, and what a move the stock has seen. Now, Devin, I mean, if you're a shareholder, you're just, you're at the top of the world, literally, right? The stock is a doubler in the last 1 year, and then comes a buyback at 10,000 rupees a share. What would you advise? I mean, would you at all advise tendering in? Would you remain invested? And since there is still a big differential between CMP and buyback price, I mean, is there an arbitrage opportunity at all?
So, Surbhi, I guess I think two things. One, this company is doing a buyback at about 2% yield to the market capitalization, 4,000 crore and 2 lakh crore worth of market cap. And similarly, I think they've been distributing dividend also of the same amount. So I think the company is extremely high as far as I think their distribution to the investors are concerned, shareholders is concerned. So from that perspective, I think the shareholders will not have any kind of a regret, even if they hold on to this particular stock in the portfolio. Second point, I think, which we are talking about is investors giving away and do the arbitrage. Yes, I think there will be some possibility of investors partly giving away because as such, as I said, the number of shares which are likely to get tendered, I think is somewhere around 15-16% of the total equity. So to a greater extent, I think if these particular shares have to be bought from the market, then in such case, I think we are not parting the full portfolio, parting hardly 10-15% of your portfolio. I guess I think some investors would try and make an attempt to get this particular situation to their advantage. So that is distinctly possible. But leave aside this particular transaction for a while and look at the fundamental prospects of this company. I guess I think they have been transitioning superbly from where they were to what they are right now, and what they are likely to do in coming years, in form of I think having the sports motorcycles. I think with the Husqvarna at the top end. Then comes the Triumph, then comes the KTM, and then comes, I think, your Pulsar and other range of vehicles, I think, which are between 50 to 125 cc's. So a power range of motorcycles, along with the electric vehicles entry, which is a transition that they are making. I guess I think this company will remain in exciting times for the next 10 years. So one would probably stay invested from the long-term investment perspective. Short-term trading ideas, I think, which the arbitrage which we are talking about would be limited to 10-15% of the holding in the portfolio.
Now, another sort of, I don't know if it's imponderable at this point, is Z. Devin, morning. It was sharply down. There was a sharp recovery, which all of it pretty much got sold into and ended about 8-9% lower. What to do with this one? I mean, if you're holding on, hoping that this merger goes through, and then you're hit with all this noise over the last 24 hours or so, hold on or, exit? What's the advice?
Good morning, Prashant. Well, I guess I think two scenarios which we look at. One scenario is the merger goes through, which is a positive scenario. However, even if it goes through, I guess I think the challenge would be for the company, the merged company, to bring in the company to the profitable and higher profitable level would be significant. If you look at in last 2 years, I think the business of the company has actually got affected. The financials of the company has actually got affected. And in order to bring back the company to the higher level of financials which they enjoyed in the past, I guess I think they will have a challenge to go for. And that's where probably I think if the merger, even if it is taking place and even if we consider favorable, it's a long drawn process of next around 2 years or more. I don't know about that. I think that may probably transit even further. The way the Japanese work, I believe, I think the process, I think normally takes longer time. So 2 years will be, I think, a safe zone, if at all I have to put it across, I think, for the company to transit if the merger goes through. Mind well, I think in last 2-3 years, I think because of this situation with the group, I think the Z has not made any money for investors. So in probably, I think in next 2 years, so a total figure of 5 years, I think is going to be, I think, a period which is a long wait for investors. Look at the second scenario. The second scenario, the merger gets called off. I think that is once again, I think, another set of challenge. How exactly you position this company, what kind of resources it would require, how do you maintain your positions in the market? These are all some of the bigger challenges, which probably may be speculation at this point of time to talk about. But I feel that it is safer to keep yourself away and probably, I think, you use the opportunity elsewhere for investment.
Okay, all right. Deven, I'm tracking the metal space for two reasons. One is on the ferrous side, because ArcelorMittal has gone ahead and increased prices by 50 pounds on a per ton basis. The reason is input costs have gone up. There's unlocking trade or the reopening that's taken place. And also import, opportunities have reduced. So that's why the European market could get a bit of a leg up. The direct beneficiary will be Tata Steel because, if a competitor is going ahead and increase prices, obviously they get a bit of a leg up. And indirect beneficiary will be JSW Steel because they're exporting some steel to various parts of the world. So that gets a leg up. The other one I'm looking at is Alcoa. They have gone ahead and they shut down one of their alumina refineries in Australia. That has a capacity of around 2 million tons. It contributes close to around 1% to the global alumina supply. So that will be good news for Nalco because they sell alumina, and good news for aluminium prices. If alumina goes up, that's an input for aluminium. So, I'm watching out for a couple of these stocks. How would you approach this space, Deven? On steel, for Tata Steel, what's your view? Because these price increases. And on the non-ferrous side, Nalco, some would believe maybe the stock has run ahead of itself. But if alumina can move up, that could give it a bit of a booster shot.
Yes, Nigel. I think the demand scenario, as I started saying up in the first part of my interview today, I feel that I think the demand scenario remains extremely strong for the metal as a commodity. And if my reading is right, I think we have entered into probably one of the strongest bull cycles for the metal in coming years. Whatever the adverse situations or the headwinds at one point of time was about the crude oil and the pricing pertaining to that, I think that seems to be remaining under control, despite of I think global turbulence in the eastern regions. I think where the wars and etc. is happening, still I think the crude oil prices are remaining under control, so which is a good sign, and it is likely to revive the demand for the ferrous non-ferrous metal both. Also, given the fact that we are transitioning from the fossil fuel economy to the renewable economy, the definite requirement would be the metals. And this particular situation is giving a good amount of clarity for all of us. On one side, the cost is coming under control because of the crude oil prices. On the other side, demand scenario remaining strong, which is allowing them to increase the prices. I think it's a good combination for metal commodities to see higher amount of performance, and particularly I think the stock prices. So one would remain confident about the prospects of companies like Tata Steel, JSW, including I think Hindalco, Nalco in the portfolio.
Okay, all right. Deven, stay with us. We'll we'll take a quick commercial break here. We'll come back and talk about more stocks, a specific stock conversation. There's about 10 minutes to go for the pre-open session. Maybe we can look at the GIFT Nifty once again, take a look at that. And after that, our technical experts and F&O experts will join in to take us through individual trades that you can take, stock-specific trades you can take with, the session, which is, as I said, 10 minutes away. 40 points lower on the GIFT Nifty is what we have. So 21,575. We'll take that break. We're back.
चलिए
Welcome back to Bazaar Morning Call. Well, the GIFT Nifty is suggesting that we're likely to pull back a little bit to kickstart trade. It'll be very, very important because the Nifty will be starting off closer to around that crucial 20 DMA mark. But let's get in Mitesh as well as Sudarshan to join us on the show to help us out with some technical trades. Good morning, gentlemen. Thanks so much for joining in. Well, Mitesh, you go first. What's your view? The Nifty is likely to pull back 40, 50 points odd. If that's the case, do you believe that we're going to be defending the 20 DMA? That's normally what we see. So you look to buy into it, or do you believe maybe there's still some downside in store, so you'll stay away from now?
Good morning, Nigel. So, I've been advocating a ranged kind of scenario, 21,500 being the first support, 21,500, 480. There was a gap there as well. And on an intraday basis, there are multiple pivots around the 21,750 and 21,820 mark. So I think it's clearly market which is consolidating. Now, what can happen is that in case we start breaking below 21,500, 21,480, then I think we might have a slightly deeper pullback to about 21,200 levels. But I think that should be it. So it's basically a market which is kind of stalled at higher levels. We are waiting to see whether it's a pullback or a sideways consolidation, but doesn't look like start of any kind of a declining trend.
Okay, all right. Let's go to Sudarshan as well. Morning, Sudarshan. What about you? I mean, how are you reading this picture? Extremely, ranging action, and it's absolutely directionless, actually.
Good morning. See, it's ranging action. This is January. We have had 2.5 months of big rallies. It is not possible for any market to go up higher every day. I've explained that earlier. January will be choppy and very painful. Now, that's the broad view. For today, I have a very different and specific view that is only for today. It is possible that today's gap down may actually be a false start and there may be some money to be made on the upside, only intraday. So if traders find support coming out at lower levels, they may consider an intraday trade on the long side of the market with a very tight 75-point stop loss. Remember, this is just today's trade. The broad view is choppy markets will kill everyone.
Okay, all right. So need to have our guard up for sure. Gentlemen, stay on. We also want to discuss individual stock trades with you. We'll do that immediately after this very quick break. Come right back.
Co-powered by
A quiet morning across Asia, barring the Japanese market. That market's on fire. No stopping it even in the new year. Japan's roaring 2% higher, but rest of Asia is fairly somber, and we are expecting a start on the flattish to slightly negative side. Well, let's go back to our technical experts then for some stock-specific ideas as well. Mitesh, morning. What are the trades that you'll look at today?
Good morning. So my sense is that I think, we'll go with a mix of buys and sells. Siemens is a buy with a stop at 41.35. Look for targets of 43.30 here. And About India had a good breakout. That's a buy with a stop at 23.800 or just below it, and a target of 25,000 can be looked at. On the sell side is Bata India with a stop at 15.88. Look for targets of 15.30, and India Bulls Housing Finance. That's a sell with a stop at 216 for targets of 200.
Yeah, indeed. A lot of these capital goods stocks had a great session yesterday in an otherwise falling market. ABB Siemens, they were doing quite well. Sudarshan, stock ideas. What will you go with today?
Trent is a buying opportunity. It made new highs yesterday. Buy with a stop under 3,060. India Mart is a very bearish stock. The charts are horrible. Intraday short with a stop above 26.55. Tata Motors is in a trading range. Here now, this range could move down or go up. Because that range has developed after a rally, it could actually see higher levels. Buy with a stop under 790. And NTPC is moving sideways even as the Nifty was going down. It's a strong stock. It's come down to a significant support level. Buy with a stop under 315.
Okay, all right. Thanks a lot for that, Sudarshan. Well, let's welcome Rajesh Palvia, VP Technical and Derivative Research at Axis Securities, who joins us on the show. Good morning, Rajesh, and good to see you, Ben. How do you approach trade? It's looking a little bit tricky on the index. On a day-to-day basis, I was just looking at it, in the last 1 week or so, we go to around 21,750, but we can't end above that level. What's your view? How do you approach trade from here?
Good morning, Nigel. Yeah, so market stuck in a very tight range, 21,500, 21,750. This range we are playing out since last couple of trading sessions. Still looking at the data setup also. Put writers are still confident at 21,500, 400 strikes. So that clearly shows these levels are likely to act as a good support area in this decline. But on the higher side, the call writers are aggressive at 21,700 strikes. So that is a challenging level at this moment for Nifty. On the Bank Nifty, we have seen a significant cut in last couple of trading session, and now we are slipped below to 47,500. That was the important support area. So that needs to be watched closely whether we are again, able to regain above 47,500 on Bank Nifty spot or not. If he remains below those levels, then possibly we may see further more pressure in Bank Nifty, and then it can go further down towards 47,000, even 46,800. So that needs to be watched closely in next couple of trading session. Above 47,500, yes, Bank Nifty may attract some short covering action, and then possibly we can see that Bank Nifty can move to 47,800, even 48,000 level. But at this moment, 47,500 is critical level to watch for. To play strategy on a Nifty. We are initiating here short straddle strategy for Nifty to playing out this range bound behavior of market. So we will sell 21,550 call and put, and by doing this, we are pocketing around 170 rupees as an inflow of premium. So that will cover your downside protection towards 21,370, and on the higher side, 21,730 is your above break-even level on the higher side. So as we are expecting towards this weekly expiry, market is going to remain in range. So this short straddle strategy may give you some profit. So when you get the shrinkage of premium towards 100 rupees, you can book profit. For this short straddle, you can keep your stop loss of 220. On stocks front, HDFC AMC is looking promising. Short covering action was there in previous session. Looking at the overall structure, we believe HDFC AMC can continue further more upside towards 3,500, 3,550 kind of level. So one can buy this stock with stop loss of 33.70. The another stock on the long side, that is from tire space, Apollo Tire is looking promising. A long build-up was there in previous day. Looking at overall structure, we believe that Apollo Tire can exhibit good amount of rally towards 485 to 490. So one can buy this stock with stop loss of 460. One stocks on the short side, that is from Chemical Basket. Navin Fluorine is looking bearish. Strong breakdown is there. So we believe that furthermore downside we can see towards 34.50, 34.30. So one can go short in Navin Fluorine future with stop loss of 35.60.
Okay, all right, Rajesh, thank you very much for today's trading list. Appreciate you joining in today. Have a good session going ahead. Well, now let's put the spotlight back on Z. There's been so much of news flow around the company, around the counter in the last 24 to 48 hours from one of the agencies, one of the wire agencies reporting that the deal is off, to Z coming out and denying it. And then more reports emerging last evening suggesting that Z has missed a payment, a $200 million payment to Disney for cricket rights. So what really is the way forward, and what should shareholders now be mindful of as we go through all of this news flow? Jinesh Joshi, research analyst at Prabhudas Lilladhar, is with us for some thoughts. Jinesh, hi, thank you for joining in. Season's greetings to you. So, the thing is, throughout all of this back and forth, I was just looking at the Z chart, and we'll pull up the 1 year as well. Through all this back and forth, when markets feel the deal is happening, the Z stock rallies to 300. And when there is this fear that, the deal might get called off, it falls to about 250. That's been the trading range on the Z stock. But now as we look at things, since, we are very close to the extension of the merger discussion deadline as well, what is it that, what are the probabilities, the scenarios that you're working with, given the news report that, suggested that the deal could actually be off?
Yeah, good morning. There are two school of thoughts currently which are being discussed. Let me answer it this way. If we believe that the merger does not go through, what do both the parties gain? If I talk about Z, perhaps the stock can correct, say, by another 30-40%. I don't know, maybe even higher than that. And even if I talk about Sony, in that case, if we believe that Disney and Viacom indeed come together, then the competitive positioning of Sony also gets weakened. So even they do not stand to gain if the merger does not go through. So honestly speaking, it is in the interest of both the parties to kind of come together and bring out an amicable solution. So I think the rational thinking is that both of them will perhaps look out for an amicable solution. And also one needs to understand that the disagreement is over the CEO candidature. And this is something which both the parties can resolve. Had it been a issue with respect to dealing with any regulatory body, for example, say you are yet to get the NCLT approval, or for instance, you are yet to get the CCI approval, you may still be in a blind spot, and there is an element of uncertainty when you deal with law, right? But over here, it is in their hands. There is some push and pull which is happening currently, but we are hopeful that some desirable solution will come through.
Exactly on that point, because this all boils down to whether or not Mr. Puneet Goenka is going to be heading this merged entity or not. If at all, could there be a scenario that the deal is called off, but called off only to restructure the agreement, because the original agreement said that Mr. Puneet Goenka will be at the helm of this entity for the next 5 years. So, I mean, I'm just saying, if there's a news flash suddenly, should shareholders sort of wait on it? Because maybe the deal is called off to come up with a new contract.
I don't think that can happen. I mean, honestly speaking, I'm not a law expert, but I mean, this perhaps may require some tweaking of the agreement, because one of the requirement of the deal was that Mr. Puneet Goenka will be the MD and CEO for a period of 5 years. It was not one of the most critical components, if I have understood it correctly. So I think they can work out some middle ground and then take it from there on. So I doubt it will fall apart just because of one issue with respect to the candidature of the merged company.
Okay, all right. Hi, Janesh. Good to see you in. But what's the probability you are assigning to that this deal goes through? You know, because otherwise it's providing a lot of trading opportunities. But what would your advice be? Because in the next month or so, we'll have clarity on which way this is going to swing.
Exactly. So as I pointed out, Nigel, earlier, that it is in the interest of both the parties to come together. I mean, if say, for instance, the deal falls apart, there is nothing to gain either for Zee or Sony. I mean, the stock price will correct even more from the current levels. The minority are at a disadvantage. Even Sony, for that matter, I mean, although it's not a listed company, but if Disney and Viacom come together, I mean, their standing will weaken, their competitive position will weaken. So even from their standpoint, it is in their interest to come together. So to answer your question, I would assign a very high probability that this will go through. But let me add a disclaimer. I reserve the right to go wrong.
Now, that's a good disclaimer to put out there, because this is a completely binary event. And, you know, you're basically second guessing what's happening in that boardroom, and that's a pretty tough position that we've put you in. But we also have Manglam, who's joined us in the studios now. Manglam, Zee, never a dull moment. Any further questions?
Never a dull moment. The only thing is that there is so much speculation still in the air. There is a lot of communication from Zee, Sony saying that, okay, we'll wait until the 20th of January to perhaps make a comment that we have to. Either way it goes. The best question then to do is, if it's a ball outside the off stump, you do a well left and then ask Jinesh. Jinesh, is there any other investable idea in the media space then? Because you're talking about the mega consolidation that may happen. Then, you know, we've seen a revival from NDTV. You've seen a lot of these newspaper stocks do well as well. Are there any other investable ideas? PVR, Inox, etc. So let's move Zee aside for now.
So yes, I mean, PVR Inox, we were positive on the counter for quite some time. But if I talk about their recent performance, I mean, which they are expected to report in 3Q, the overall box office collections on sequential basis are down by about 20% odd. So we have downgraded the stock to accumulate. At least for the next quarter, I think the overall movie pipeline is even not that exciting, so to say. So we might see some tough time for PVR. But overall media space, I mean, I cover these two names, and honestly speaking, Zee is a double-edged sword, as I just mentioned. And PVR, again, we feel that this quarter may be slightly weak, and even the next one does not have much of a hope. So we would like to kind of not go all in either of the names at these levels.
Okay, all right. Got that, Janesh. Thank you very much for joining in. You have a good day. Appreciate your time with us here. Well, the pre-open Nifty is suggesting that we'll have a 15-point downtick with weakness in banks once again. So let's watch for this. Nimesh is with us now to talk about a couple of interesting brokerage reports. So which is the standout report for this morning, Nimesh?
Hi, sir. Today's standout is on IGL. Technically a double downgrade from UBS. So today they've downgraded the stock to sell from buy, and they've sharply cut the target price to 400 rupees versus 630 earlier. The stock is anyway derated a bit and now sitting around 430 odd levels. So not much downside, but technically a double downgrade. Now the key reason for the downgrade is lackluster volume growth in the near term, and in the long term, big risk to the core business as well. Now, infrastructure expansion and policy support is just to reflect in the LNG, CNG volumes growth for IGL in the last few quarters. In fact, even in terms of valuation, the stock is now trading at almost long-term averages. And given the risk of volume headwinds, they feel that there is not much upside from current levels. They've actually lowered the volume guidance for FY24 to FY26 by almost 11 to 16%. So there is a big headwind risk, and on back of valuation not supporting, a big downgrade on IGL to sell now, and target price has cut to 400 versus 630 earlier.
Okay, all right. Thanks a lot for that. Nimesh explains why the stock is a little bit lower, even in pre-open, down close to around 2.5%. But Rima joins us to tell us about Indus Stars as well as Bharti Airtel. BofA has upgraded the stocks. Rima?
Thanks so much for that. So it's a double upgrade for Indus Stars by BofA. They've upgraded it to a buy. Their target price now stands at 270, a good 25% premium from where the stock currently is, because they're saying the risk reward is turning favorable. And there are a few catalysts in 2024. One, reduction in capex. Therefore, there is more free money available with the company, which can be utilized to give dividends. Secondly, if Vodafone Idea reduces its provisions, then there is scope for a special dividend. And finally, on valuations, not expensive because it's trading at an EV to EBITDA of 5x, much cheaper than global tower companies, which is trading at about 12-13 times. On Bharti Airtel, BofA has upgraded the stock to a neutral. Their target price now stands at 1,145. Again, it rests on a meaningful tariff hike to take place in 2024, continuous market share gains. But they also say a capex pickup is likely, as its capex is based on improving handset penetration. Back to you.
Okay. All right, Rima, thanks a lot for that. Well, we're just a few seconds away from market open, and we have the market open. Well, it's not as bad as the GIFT Nifty was suggesting. We're down close to around 20 points, or 20-25 points approximately. The Nifty Bank is down 130 points, and that one is taking a harder knock in today's trading session. What's losing out then? ONGC, that's down close to 2%. BPCL is down close to 1%. Grasim is pulling back close to around 0.7%. And NTPC as well, down close to 0.5%. On the flip side, what's doing well? Well, it appears some of these tech-related names are batting for the bulls. HCL Tech is trading in the green. You have LTI, Mindtree, and as well as Wipro, all three of them well in the green. Add to the list, Mahindra & Mahindra, that's bounced back. That's up close to around 0.8%. And Adani Ports as well is up close to around 1% or thereabouts. So the markets have opened more or less flattish. The Nifty Bank is under some pressure. But as always, the bright spark in the market is the mid-caps. That's where all the action is. Pull up the advanced decline ratio, you'll see close to around 3 stocks are advancing for 1 stock that's declining.
Okay, I'll start with the newsmakers. Polycap is recovering from yesterday's fall, about 3% up on this one, as is Z. It's up about 2%. Looking at gains on Indus Towers, the stock that Rima was just telling us about, on the back of positive brokerage commentary, 2% up on Indus. And then, okay, Delta Corp, that's the big one. Big knock on earnings. Street not liking their poor performance in the quarter gone by, 5% down there. And Vedanta is reacting quite negatively to this Moody's downgrade on Vidanta Resources debt. 2.5% gone from Vedanta. Beyond that, if we talk about the volume charts, seeing some early buying in Tata Power. Also, NCC is up and about. Nalco is looking good this morning, about 3% up on Nalco. But having said that, have to keep in mind that the rest of the PSU pack is taking it a little easy this morning. Look at the bigger names like Coal India, Power Grid, or even beyond the index. Look at an NMDC, REC, and then of course the oil marketing firms, IOC. A lot of them have started the day on the downside. Financials in general a little weak. L&T Finance, Bandhan down, and Manappuram. This is an unusually large cut on Manappuram this early on in the morning. It's down 4% already. So flattish on the indices. All about individual stocks.
A lot about individual stocks, Surabhi. Manappuram, like you pointed out, is the unusual mover on the downside, though Delta Corp is recovering a tad from the lows, open 5% lower, now sitting with a cut of just about 3.5%. So that's something we'll be watching out for. IGL, the standout brokerage that Nimesh pointed out, there was a downgrade, that stock down 2%. And also a lot of these oil marketing companies are seeing some bit of profit booking. A couple of things to note here. Overnight we did see a mild spike in Brent, and these stocks have already seen a big rally. 20 mild spike, maybe case for profit taking out there. Just keep an eye out on United Spirits, though. We're seeing a decent move. The only consumer stock, so to say, which is doing a lot better in today's trading session, that's the one which is up around 1.5%. Giving it company is perhaps Titan, which is mildly higher, just about 0.5%. But suffice to say, there are a lot more gainers, but the quantum of losers, the volume of losses are a lot more. Gains are many, but small proportions. Losses are a few, but large losers. Keep an eye out in markets right now.
Oh, absolutely. Well, this explains the fall on Manappuram. I'm not sure why SEBI has put the IPO of the microfinance unit, and it's not delayed. Abeyance is the word we're getting from I think this must be coming in from the exchanges. We'll try and get you more details in this, but that explains the negative sentiment that surrounds Manappuram early on in the morning. Otherwise, it's a lackluster start But there is some buying at the lows as well. That's the good news. There's a bit of hint of green now on the Nifty and on the mid-cap index. Banks continue to be the sore spot. By the way, I should just point out here that the market is, making that differentiation on IT ahead of numbers rolling in. HCL Tech has seen consistent buying in the last 1 or 2 sessions, including today. And Rima has told us that this one is likely to get the best in class quarter-on-quarter top-line growth because they'll see a lot of deal ramp-ups. The others will be absolutely anemic. In fact, will probably post a decline, TCS and FE and especially Wipro. HCL Tech is supposed to be the best earning on a December quarter basis, and that's a stock that's finding some traction. Well, let's discuss this market and the setup with Tahir Badshah, CIO of Invesco Mutual Fund. Tahir, thank you for joining in. Season's greetings to you and your team. Wish you a very happy new year. So, the new year has brought about a bit of a reality check. I guess investors thought this one-way rally, this big December party will continue. But now we're getting used to, what a typical range-bound market looks like. Do you think this is going to be the way things play out over the foreseeable future? Are you expecting more consolidation? Or do you think it's a matter of time and the market will give way, one side, either up or down?
So, I'd like to think that we've seen some consolidation of the last 1 or 2 weeks, but by and large, I think the uptrend is still has been maintained. So probably over the last 3 months, if you look at it, the market has done reasonably well for itself, and the characteristic of the market has by and large remained the same. Nifty up about 10% and the mid caps and small caps doing significantly better, 15 to 20% on those names. So I think that is still the broad construct of the market, but I think now, we've seen a 15%, further, by and large, a 15% kind of move in the market over the last 3 months. So obviously, at this stage now, we are relatively more, the risk reward, I think, is evenly balanced at this stage. Although I would like to still think that probably, reward probably outweighs a little bit of risk into the first half of the year. We still probably are in a situation where the overall economic construct is reasonably positive. And there are certain risks which are lurking in the market, but there's not really much to say that probabilistically, they are a lot likely to happen than not. So, to that extent, I think we expect some of this momentum to continue in the first half. By and large, I feel that, much of the returns actually, like as I said the last time as well, will probably be seen in the first half of 2024 for this calendar year, and then probably, the Indian markets may take a breather, a moderate pause, or some bit of downside as well from there on.
All right. Hi, Tahir. So you're leaning towards reward rather than risk, particularly for the first half of the year. But what about mid and small caps? It's split down the middle because plenty of good stories playing out there, but there are also signs of frothiness. So I think it'll be imperative to be very stock specific, right?
Yeah, I think, as we've traversed over the last 3 months, obviously things have got a little more heavier. Valuations have moved up as well. Particularly on the mid and small cap side. Once again, a significant outperformance compared to the large caps. But I think we still continue to kind of at the margin find ideas. We have to avoid some of the obvious pitfalls and probably something which is a little more overdone compared to the others. But I think it is still a lot about growth, and I think that's what is driving the market and probably will continue to drive the market. The overall theme will be to probably reward growth-oriented stories and those who continue to execute and deliver well disproportionately compared to the others.
Right. So you said you continue to look for ideas. Where are those attractive ideas as the market looks relatively, frothy, so to say? Will you still stick to the private banks that you liked earlier and the IT space that you believe has some tailwinds ahead of it?
So, BFSI is one space that I think is still worthwhile. Probably it at least can be argued as something which has got a certain amount of value, at least as far as the banking component of BFSI is concerned. But the space is attractive in general from the point of view that, it is now a larger canvas comprising of both lenders as well as a fair bit of growth-oriented non-lenders as well. And that makes it a relatively more attractive space. So I would like to think that that is something which is still reasonably doable, and that is something that we probably are also incrementally presenting a little more of in our portfolios. IT, on the other hand, we'll have to take it as it comes. I don't really want to preempt a lot of things in this calendar year. I would rather just take a neutralish stand and take things as they come instead of preempting anything, whether it be in the form of interest rates or direction of inflation or or what's going to happen to commodity prices and so on and so forth. So I think it's that kind of a thing at this stage of the market. I think we'll wait for, we're now probably a week away from the commentaries of the important IT companies, and let's see how things swing, and then we take a view accordingly.
Okay. By the way, just want to point out two stocks, RBZ Jewelers and Motisan Jewelers. These are recent listings. RBZ is a really small name, it's less than 800 crores of market cap. And these stocks are locked in upper circuit, and therefore, I mean, the point that even Nigel was alluding to, perhaps just good to have a bit of a cautious view out there. Go there, do your homework, and then go about your investments. So RBZ, Motisans, the smaller jewelers are finding plenty of traction. Sorry, you were saying, Nigel?
No, just one more stock. Jyoti Structures. Yesterday we saw big volumes out there. Mr. Hiranandani, looking at the large trades. He sold close to around 45 lakh shares, but that's got absorbed. So that's another stock that's up close to around 5%. There was some selling pressure. Also, there are a lot of banks that hold stake over here, which, that's telling you that there could be further selling pressure in future as well. For the time being, it's getting absorbed. So that's another big volume buzzer in early trade.
Just a word on all these new jewelry companies that have come by the markets. The thing is that everyone now starts to look at the success of Kalyan Jewellers and the relative success of Senco that has happened in the markets, and starts to believe that, okay, now we have a big boy Titan out there. It's trading at certain valuations, but there's reason for it to trade at those valuations. Kalyan has done well. You've seen a decent move in Senco as well. So might as well just try to bid these up as well. Usually, the kind of moves that happen in IT spaces where people look at the large IT companies and then suddenly believe that mid-cap ITs will suddenly start doing better because of the valuation discount. Everyone starts to look at this. But,
absolutely. Classic bull market mentality, right? That you look at any new idea in a space that's worked well, and you just paint a very optimistic picture.
Let's get Tahir's view actually on this space. Tahir, what's your view? Everyone for many years was looking at Titan. It's been a big wealth creator. But now some of these smaller names, if you look at the last 1 year, my director will just pull up the chart of, say, Titan as well as Kalyan Jewellers. Some of these smaller jewelers, well, they are giving the bigger returns, the bigger deltas coming out of them. But what's your view? How would you approach this space?
So I think we've broadly been constructive on the space, and this is one retail business which obviously has the natural tailwind of gold prices helping overall growth. Same-store growth at least gets reasonably well driven by gold prices as well, and gold prices have trended very well in the last some time. So I think there is a constructive start to this sector as such. Obviously, Titan is a great example of a story which is of a company which has developed an all-India footprint and successfully as well. And I think some of the other players are challenging and probably trying to move in that same direction. So once again, like as I said, some of these will turn out to be success stories. Probably over a period of time, we'll have to see as to how they execute. Many of them are regional players who are trying to aspire to become more national players, and I think there will be failures and successes out of this. So we'll have to try and see how it goes. But this is broadly going to be the story which will emerge as far as some of the newer contenders in this space is concerned.
Just one point on Motisan's Jewellers. It's come out of T2T. Till yesterday, the circle limit was 5%. So that's another technical factor at play. Could explain one of the reasons why that stock is up more than 15%. It's come out of T2T out of that 5% band.
All right. So that's about Motisans. But Tahir, you did say that a lot of these companies have the tailwinds because of gold prices, etc. You like BFSI. What are your thoughts on gold financiers themselves? Largely because Manappuram, now that stock has taken a big knock. It's down around 7% some sort of uncertainty with regards to, the IPOs or value unlocking in one of its arms. What are your thoughts on gold finance, and do you think banks will continue to take market share away from erstwhile gold finance specialists? What are your, how do you play this?
So at this stage, we don't really have any exposure to pure gold financiers in any of our portfolios. And I think, as you rightly said, we've been cautious for some time, primarily on account of the competitive intensity in the space. Although gold prices being higher is a natural tailwind once again from many of these, and therefore some of those competitive challenges are not easily apparent during a period when gold prices are on an uptrend. But I think this is a space which will see that competitive dynamic play out a little more. So I think in that sense, therefore, it has been easier for us to play some of the direct beneficiaries of stronger gold prices and the fact that there is scalability in some of the jewelers or the jeweler retailers.
Okay. By the way, I also noticed, let's see if we can pull those stocks up. Honasa is seeing more buying, as is Nykaa the last time I checked. So these consumer stocks are really catching the eye. And, that brings me back to the question, discretionary consumption. We all know it's doing well. We are seeing what's happening with these, premium houses, etc., and, the big bikes and the big cars. But the question is, from a, stock point of view, what can one play now? Because the stocks have been moving higher. And in specific, I mean, beauty, personal care, some of these newer listings in the consumer / technology / retail space. Do you like them?
Yeah, some of these, and we've have a fair bit of exposure to many of these in different ways, whether it be jeweler retailers or whether it be fashion retailers, etc. So I think we are there at that space. I would like to think that probably we've seen a fair bit of the tailwind of premiumization in both the retail sector as well as the non-retail sectors, and that while it continues, I don't really see any immediate reason for it to slow down, at least as a business. My sense is that probably if we see inflation moderating in this calendar year or the next fiscal year, we probably might see some of the bottom part of the retail or the consumption pyramid actually starting to even see some uptick and get supported as well, particularly given the fact that it has underperformed or that those businesses have been challenged for the last more than 2 years.
Trent, I remember you earlier liked it. After this big up move that we've seen all of last year, and that up move continues even now, the only concern is valuation. How much do you think is priced in, and would you still remain bullish on this?
Well, I mean, apparent valuations are obviously way too expensive, so you can't deny this. But at the same time, we've, like as I said, we have still, I would like to be reasonably constructive on names which are delivering well, executing well, and they've got their sweet spots which they're growing exceptionally well over the last some time, particularly in the case of Trent, as you mentioned. So I think, like as I said, that is what will dominate. I think the pockets where growth is visible, growth is coming about nicely, and there is a possibility of earnings upgrade. So I think if you measure it from the last quarter's earnings results to now, many of the stocks which have done exceptionally well, notwithstanding the valuations which were prevailing at that point in time, have done so because of the fact that earnings have got upgrades, in the last 1.5 months. And I think if that were to probably be the trend which continues, then that will support some of the valuations. I'm not necessarily trying to say that these are buys without any, they have adequate margin of safety from a valuation standpoint. But if you're probably, good enough to bear a correction of 10-15% in some of these names along the way on their journey over the next 3 to 5 years, I think you should be reasonably positive even now.
Okay, all right. Tahir, it's been good talking to you this morning. Thank you so much for joining in. And once again, wish you, your team, great 2024. Let's see how the markets play out. For the time being, the market is not really able to stem the fall. And by the way, we are below that level of 21,500. Why do we keep talking about that level? It was a low that the market made last week and, continue to hold. Right now, we're trailing below that zone. Let's put the spotlight now on the auto space. This is a sector that has been in focus on the back of a lot of news flow. The Bajaj Auto buyback, of course, is one. Then we, of course, had the December numbers come in, the monthly numbers come in. FADA data shows that December was a good month for the retail sales. Sector witnessed 21% growth. To discuss the business momentum and the outlook, we have with us Vinkesh Gulati, Chairman Research at FADA. And we also have auto industry expert Arun Malhotra, who was also a former MD at Nissan. So, gentlemen, thank you very much for joining in, and happy 2024 to both of you. Vinkesh, let me come to you first. On the retail side, what are the trends that you're witnessing? And I remember an earlier conversation where the issue was that the inventory was, I believe, around 2 months odd. So, that was slightly maybe higher than what dealers would want. But in general, as we're looking at the start of 2024, are you expecting strong demand to continue?
So hi, thanks for having me. Obviously, inventory had always been an issue in the dealership space, but we were lucky post-COVID, the inventories were down. But I feel the production is now at its epitome. All the companies have increased their production. The demand is also good, but the mismatch is again there. Pre-festive, we were happy to have a 2 months passenger vehicle inventory, but obviously that was in term of covering the festive spurt of retail. But as we close the festive and had a very, very great December, we are still seeing that there has been respite in the inventory, but it's still at a very high level. And a 2 month inventory, which we had just released the data yesterday, day before, is not the right inventory to be viable in a market, and not good for the customer also, because customers also get an older manufacturer vehicle when we sell them. So no doubt it had been an awesome calendar year, awesome last 3 months. Q3 was great. But on the side of inventory, yes, if I talk about cars, that is where the major stress is. And FADA as a body has always been saying that. And this time, for the past 2 years, 2 months or 3 months, we have been voicing that this is not the right trend, what OEMs are doing by pushing more vehicles than what is the demand in the market.
Got that, Mr. Gulati. Let's welcome Mr. Malhotra as well into this discussion. Morning, Mr. Malhotra. Thanks so much for joining in. What are the demand trends you are looking at? And if you want to bifurcate it between passenger vehicles, between commercial vehicles, where do you see more traction on ground?
Passenger vehicles have done very well last year. I mean, growth maybe at 9%, but you have to see it on top of the 20% growth which had happened the previous year. So 4.1 million is a record number, and to that extent, it's very strong. But going forward, since it's a very high base and it's a record number, the growth will not be more than 5 to 6% in the next year. But the value of the product is rising because customers are upgrading, new technologies being incorporated, aspirations are going up. So that way it's a good year, good space to be in the passenger vehicle. Two-wheelers, which has been actually been performing below par, because the 21 million figure which was achieved in 1918-19 is still far away, we are at 18 million figure. But I think the last 3 months have been good for the two-wheeler industry. Stocks are also under control. Festival season is good, and I think the elections and the festival season all there. The demand is getting up, and both we are seeing the demand urban. But having said that, the growth would be more in the high single digit, 8 to 9% growth. That's what is expected. And as far as commercial vehicles are concerned, it's been a steady year, but the light commercial vehicles haven't done very well last year, which I think should do better this year. The heavy commercial vehicles should continue their pace of 7 to 8%.
The kind of thrust everyone has on infrastructure, etc., perhaps we would see some pickup in commercial vehicles at some point. But gentlemen, hang in there, because the market has turned for the worse. We started with more stocks advancing than the number of stocks which were declining, and now suddenly that has flipped over. The mid-cap index, which was actually doing a lot better, has now begun to do a lot worse. The mid-cap index is down almost 200 points, and from the highs, it's about a 0.5% drop that we've seen itself. A bunch of stocks which are more notable in terms of losses that we see. Nippon Life Insurance has had opened in the green and now moved into the red. We have IGL, which continues to move lower. Godrej Properties has moved to the low point as well. And Oberoi Realty, the real estate pack, which was doing well over the last few trading sessions, seems to have come in for some bit of profit taking. The Nifty Bank, however, has ameliorated some of its losses and is now, holding on to that 47,000 mark where a lot of puts were written, Nigel.
Well, typical textbook stuff, Mangalam, is playing out here, because on the Nifty, we went down to the 20 DMA, and normally when you see the first time the Nifty goes down to the 20 DMA, that's normally defended. So that's why we went down to around 21,450 odd. That's the low of the day, and from there we have bounced close to around 50 points. And as you said, that's because the Nifty Bank has seen a bit of a recovery from the day's low. So for the time being, the Nifty has managed to defend the 20 DMA. You'll want to play out the session, with that level getting defended. But the Nifty Bank, that's the one that's underperformed, and that holds the key even for today. Beautiful chart, yeah. That's the one that we're talking about, the 20 DMA that just got defended on the Nifty.
I just want to point out, by the way, that along with the banks that are suddenly coming back, look at the life insurers. Interesting trades going on over there. Look at SBI Life, HDFC Life. These stocks are pretty lackluster. Yesterday, we had the monthly numbers come out. But there's some buying that's quite evident right now on some of the bigger insurers. Reliance, TCS, these are the other stocks. HUL is still fighting for the bulls, not giving up just yet. And therefore, the fight continues to be around this mark of 21,500.
The one that actually hit a boundary in the last over was HDFC Bank. That's the one that took the Nifty bank higher, and HDFC Bank is currently now moved into the green after opening in the red and currently trading at the higher end of today's trading range so far. But let's go back to our discussion with Mr. Gulati and Mr. Malhotra. Mr. Malhotra did point out some of the forecasts for this year across the board. Mr. Gulati, what are your thoughts? As we go into 2024, there are elections, there is commodity prices cooling off, so maybe price stability in the auto space and also hopes of some recovery in rural with a lot of thrust in infra. Put all these things together, what are your thoughts in the way all these categories will grow? Two-wheelers, passenger vehicles and heavy and light commercial vehicles?
So starting from two-wheeler has now shown a very good comeback after you see regularly seeing for the 2-3 months a double-digit growth. I hope two-wheeler will continue to grow. Rural has started supporting. No doubt it's not back. The Bharat is not as Bharat was before, which was supporting the auto retail, but it has come back and slowly the entry-level market is growing. Not to the original level though, but the positiveness is there. So obviously short-term or long-term for this calendar year, two-wheeler will be growing at a double-digit growth. One, because of the base a bit low. Second, all the OEMs coming up with electric vehicle products coming in and new products being launched. Passenger vehicle, no doubt we say that inventory is bad, but still the market is ripe. There are a lot of new products being launched in the coming time. The hype will be there in the market and it will help us in improving, like Arunji said, on a higher single-digit growth, and that is a good thing for car market to happen. Commercial vehicle will be stable, growing a bit, and like you said, everything is on infra, and we are confident that infra push is going on. So CV is also on a positive side. Three-wheeler is one segment where electrification has been in the major trend, and that is what we are looking at. It will see a normal growth, but not a very big growth where you can bounce on. But overall, auto industry for even this calendar year or the coming quarter is on a positive side, and we'll see double-digit growth in the total auto industry, and specifically in two-wheeler, a very, very good year coming this year.
Okay, all right, gentlemen. On that optimistic note, we will wrap up this discussion outlook for the sector in 2024. Thank you very much for joining in, and wish you a good year as well. Well, with that, we do have to take a very quick break. We'll come back on the other side and put the spotlight on Delta Corp. The company came out with numbers which are not looking too healthy. So what's the outlook? Anil Malani, CFO of the company, will be with us for some thoughts.
Cool. Welcome back. Let's talk about the stock of the moment. We have Delta Corp. Under pressure on the back of a weak set of third quarter earnings, the company's revenue and EBITDA have taken a hit in what is a seasonally strong quarter itself. Anil Malani, who's the CFO of Delta Corp, joins in to discuss more about the Q3 performance, but more importantly, talk about the regulatory impact as well going forward. Thanks a lot, Mr. Malani, for joining in. What explains this seasonal weakness in a seasonally strong quarter for you? Were all your casinos operational? And secondly, what's the legal status on all those GST, show cause notices that came to you? You haven't made any provisions for them. As of now, what's the legal status?
Thanks for having me on your show. So you're right, the October, November, December quarter generally is a very strong quarter for us. But as you remember, this is the first quarter where the new GST tax regime kicks in. Paying GST on GGR, we are now starting to collect 28% GST on chips sold to our various customers. Generally, the season for this quarter picks up post-Diwali. Diwali was also slightly delayed. So we took an informant call and said we will just wait it out and see what the response is going to be by our customers. As expected, before even playing the first bet, you're down 28%. This was something which a lot of customers didn't see much value. So after getting into several discussions with them and with the internal team, we pivoted our business model a bit and started offering some promotional chips to our players, which in the month of December, we saw our revenues practically come back to the same levels that we probably would have done in the month of December previous year. So just to give you a perspective, what we did in the quarter of October, November, December, 55% of our revenue came in the months of October, November. This was a conscious call and was expected. We wanted to see how this plays out. 55% of the quarter revenue came only in the month of December. So we believe the steps taken by us to retain our customers and give them full value has played out well. And this quarter, whilst I will not give you any guidance, but we are hopeful that we will be able to turn around and probably get back to the same revenues that we were doing earlier. Having said that, one of our ships also is going to dry dock this month. So to that extent, our revenue may be slightly impacted. But on a run rate basis, yes, we would be back.
Okay, Mr. Malani, a quick two-part question. One, if you could quantify, putting all the GST notices and the demands put together, what is that total quantum, the number? That is obviously a matter of dispute right now between you and the tax department. And what's the thought? I mean, why not make some part provisions for it, as Mangalam also asked? That's one part of it. And second, you said that in December, the strategy was to offer promotions to mitigate the impact of this 28 rupees on every 100 rupees that, someone's putting up to buy chips. Will your discounting and promotions continue to be at that extent? I mean, how much are you mitigating in terms of this 28% GST? Because, this is something, this could be perhaps a recurring issue because it deals directly with the business model.
So I think the total claim in terms of show cause notices issued to us is in the vicinity about 24,000 crores. Just to give you a perspective, that's about nearly 5-6 times our market cap. So trying to make an decision at this point in time is not needed. We are being guided and advised by our lawyers who are fighting this, and they do believe that all the cases now are going to be combined and be heard probably next month. And they do believe that this is a strong case for us. So for the time being, no provisions need to be made. Answering a second question with respect to the promotionals that we need to keep offering our guests, yes, I think that's the need of the hour and is going to stay on. Though it's not going to completely have too much of an impact on our bottom line, but yes, we will have to now consider that aspect is going to be an additional cost, and to that extent, we will have to grow our revenue. Currently, we are running full capacity. We've got 3 ships on the water. One of them will be placed quickly. So new capacity is coming in. And once new capacity comes in, which is double the existing capacity, we are hoping that our revenue is going to grow leaps and bounds.
Give and take everything, Mr. Malani. Do you believe that on a year-on-year basis in Q4, the revenues will be as much or a little bit better than the same quarter last year?
No. So the Q4 revenues, we are pretty confident would be probably in the similar lines of the quarter that just finished. I mentioned will be going into dry dock, will be out of commission for nearly a month. So to that extent, our revenues are going to be impacted. Next quarter, which is New Year quarter, 24-25, it's a lean quarter always. We expect that also to be slightly subdued, but July, August, September, I think that's also a good quarter. And by then, everything would have played out, matters would have settled. There would be some outcome of the GST also, and we believe that we would be back. Yeah, business should be as usual.
So GST, this change out there could have impacted numbers. I'm wondering whether Indians felt a little bit richer as well for the past quarter and maybe went to overseas shores. Maybe that could have impacted some part of your revenues as well, because I understand Goa was not as full as what it normally is. Be that as it may, let's talk about the other part of the business, the online gaming. Out there as well, when do you expect it to move into the green? And also there was talks of that IPO. Is that shelved or should we hear about it sometime in 2024?
So obviously, with the new tax regime, most of the online companies have now started to absorb the GST cost and are offering some kind of bonuses and promotions to mitigate the impact. This obviously is hitting the bottom line straight away. So we, again, for this online business of ours, also took a conscious call. We wanted to consolidate and ensure that as our players keep on playing, we should not be losing too much of revenue by too much of compensation. And therefore, whilst our revenue has remained stagnant, we do believe that there's going to be a consolidation taking place in this vertical. So we're going to wait and watch and see how this plays out. Having said that, our revenues may not have grown, but we managed to keep it stagnant. And on an EBIT level, we have made some profits. And that's actually going to be the DNA for us, that we don't want to lose any more money. And we be completely focused on our poker vertical, which has always been our mainstay.
And what happens to the IPO plans?
IPO. Go ahead, sir.
On the IPO plans, currently with this uncertainty, overhang with respect to the GST, especially, with the games of skill, games of chance, and the entire online space, where there are several judgments which have been given by various high courts, I believe now is all going to be clubbed and would probably come up for hearing sometime in the near future in the Supreme Court. And based on the outcome of that, we probably would be able to take a decision. So if it's going to be favorable, yes, I think we'll be back. If not, then we'll have to see how.
Okay, so as of now, you will wait for some regulatory clarity before you go ahead with the IPO plans. That's the way we should read it, right?
That's right.
Okay, let's talk about your foray into real estate. You had invested about 100 odd crores in Peninsula land. You want to invest about 250 crores out here. What's the potential of business that you see here? How much more investments do you intend to make? What are the projects here? Because this is a diversification away from your core business.
Yeah, so this can be treated as slight diversification. So DNA, as far as real estate goes, it's in our DNA, right? We've in the past done several projects and we've exited profitably. The tie-up with Peninsula, we've taken a small strategic stake. We do believe that there are several proposals in the pipeline, and we are happy to join hands with them and do a quick in, quick out with respect to projects. We're not going to be investing large sums of money and going to have large gestation periods, but there are several redevelopment opportunities which are coming in. The real estate vertical for corporates and reputed brands now seemingly seems to be in our favor. So we've got a good amount of cash on our balance sheet. So to get some more value into our business, we thought this would be an ideal fit for us, and therefore the investment. There's a
Mr. Malani. Yes, please continue.
So we're going to be having a joint venture between both the companies, of which Delta would probably hold a majority stake. And this would be our foray into this vertical. And the whole purpose is to develop a reputed brand and play along with the large players also in this business.
Mr. Malani, that brings me back to the deeper strategy question, and I'll make it two parts once again. One, given that, as you said, I mean, in the near future, promotions are going to be a way of life because 28% GST is a reality. It is the new law. So what will be steady state margins now? I mean, in the quarter gone by, margins came down from 40% to about 23%. So going forward, as you look at promotions, at the EBITDA level, what will be a steady margin run rate? And then the larger question, with your foray in real estate and hospitality right now being a very small part of the revenue, over the course of the next 1 year, will we see Delta make a bit of a pivot perhaps into some of these other businesses to open up new revenue streams?
Yeah, so typically our businesses are fixed cost business. If our revenue is impacted, that impacts our bottom line straight away, which is what happened last quarter. Our margins really fell because our casino revenues dropped for obvious reasons, and that impacted the bottom line. Now, our real growth would come only after we increase capacity, which, as you are aware, we have a new vessel probably coming into business around the second or third quarter of the next financial year. this will substantially add to our revenue. And once our revenue goes up, then obviously we can afford to take the impact on the bottom line as far as our promotional expenses for the casino business goes. So growth will come, top line will grow, and yes, our profits will also increase substantially.
Okay, so maybe a revenue mix, just quickly to complete that FY25 revenue mix from real estate, this new projects that you're getting in from hospitality, and of course the core business itself.
So hospitality typically supplements our casino business, and that will remain 10, 12, 15% of our portfolio. We don't really see it increasing too much. Our Daman property, actually, as we speak, we are awaiting the casino license over there, which the matter is in the court. As far as the real estate goes, that's an opportunity that we see currently. We don't plan to get completely defocused from our main line of business, which is the casino business. But that opportunity will continue to exist till such time we see growth over there. And yes, there is a possibility that we may pivot into the real estate if required, because there are no great opportunities in the casino business in our country so far.
All right. And, the promoter of the company is supposed to be one of, the sharpest minds on real estate. So we'll have to see how you'll pivot on that front. But from Goa, let's talk about Daman, since you briefly spoke about that. When is the next hearing? The street has been waiting for many, many quarters for the timing of the resolution of this. Is it likely? At least tell us when is the next hearing, so then we can, have some bit of a time frame that maybe some part of 2024 this gets resolved.
So I think there's something coming up next month, and the matter actually was well heard last time. Unfortunately, the bench changed, so we are back on explaining the whole matter again. So this will go on, and we've also been patiently waiting to get some resolution on it.
Okay. All right. So maybe next month, hopefully some kind of headway out there. Final question from my end then. You'll still have a stake in Advani Hotels. You'll sold, I think, a small portion of that. Any offer on the cards? Any plan? Because if the core business is going to be in a bit of a tizzy, the stock market, the shareholders will be wanting for other avenues, So will you look at selling the stake out there?
Yes, of course. At the right price, there would probably
What's the right price, sir? What's the right price according to you all? How far away is it from current pricing?
So we haven't really put a number on that, but as and when we see value in the sale price, we probably would be exiting out of that. And
Mr. Malani, Advani Hotels currently trades at a market cap of 500 odd crores. You have closer to 28% stake. So there's immediate 150 crores for you for the taking. Do you believe it can go much higher before you go ahead and unlock value? Or maybe this is a chip that you're keeping with you for a day when you have to encash them at, or for any other business purpose. What are your thoughts here?
So I would say yes to both your questions. I believe there can be some more value built in over here. Hospitality, tourism, as you know, is now doing really well. The cycle has just started. And we don't really need any cash right now. We pretty much well-funded projects. We've got a reasonable amount of cash on our balance sheet. Whenever the need does arise, we would liquidate that for sure.
By when would you have any? I mean, is it a price you're waiting for? Is this a time you're waiting for? Or is this a circumstance that you're waiting for?
Actually, none of the above. We would probably just take the call when we feel the time is right.
All right, so it's the time that you're waiting for. Thank you so much for joining in and giving us an update on your business. The third quarter, of course, was affected by a lot of things like you pointed out, but the fourth quarter looks a little better because of the business changes that you've made and also something that you are looking at in terms of diversification. Of course, all eyes will be on the next month where you say that all the clubbed hearings of the GST show cause notices will take place. 23 to 24,000 crores is the overall value of the GST show cause notice. While the management was speaking, we did see some amelioration from the lows on the stock price. Opened about 5% lower, currently sitting with a cut of about 2.5 odd percent. Not completely out of the woods, but not particularly very bad either. So that's about Delta Corp for now.
Okay, all right, that's Delta Corp. Let's get back to the markets. It's pretty interesting. You do have the big guns firing, but it's still not enough. By big guns, I mean ICICI Bank, TCS, Reliance. So these are your, heavyweights which are trying to, do the heavy lifting. Clearly not working out. There's some buying on Farma as well, by the way, this morning. So Cipla is up and about. Divi's was looking better, but again, there's volatility on that counter as well. Mitesh is now joining in. He's back with us. Mitesh, extremely choppy start to the day. Would you take any bet on the index at all?
So, morning, Shruti, we have talked about 21,500 as a support. Intraday, we went below that. We did advise our clients to take some long positions with a 40, 50 point kind of a stop from there. And I think, if this level holds again, then we might have see levels closer to about 21,700 to take profit. So we'll take, assuming that this range holds, we'll keep trying to buy at the lower end of the range.
And what about stocks then? What trades now?
So on the stock side, I have a sell on IDFC Limited. Keep a stop just above levels of 123.5 and look for targets of 116 here. And on the buying side is Cipla. I think we're just highlighting the stock as well. It's come on my buy radar. Keep a stop below 1290 here. Look for targets of 1340.
Okay, all right. Thanks a lot for that, Mitesh. By the way, from the broader markets, fair bit of action, guys. You have Yes Bank that's moved higher to the high point of the day. I think that one should come up for you on the screen. Couple of other notable movers, Dish TV as well. Volumes very, very high. That stock is spiking up as we speak. But I think the reason that the markets are willing to fight back is HDFC Bank. That opened up a little bit lower. That moved into the green. It's helped the Nifty Bank to move into the green. And it's helped the Nifty as well claw back close around 80 points on the low point of the day.
The other H stock that I'm looking at is Honasa. Surabhi pointed out that it's opened well, but look at how well it is doing now. It's closer to a fresh high on that counter, closer to the 500 mark. And the reason I say that is largely because, in the FMCG space, most on the street are expecting no growth to come by from most of the companies, as their, quarterly updates have indicated. But Mamaearth is, on this margin improvement trajectory. The growth is obviously higher than the industry. So this is something that everyone is hoping for, would be perhaps an outperformer in an otherwise muted quarter for the large beauty and personal care companies, which is why it's bid higher. And obviously, Nykaa also did suggest that, they had a 20% plus growth in their beauty and personal care vertical, 40% growth in their fashion vertical. So fashion, beauty, all of that doing well. Nykaa at the high point. We have Trent at a record high, and we have Honasa doing well too.
Okay, so shop away, beauty, personal care, clothing. I guess it's that theme that's working. Let's take a very quick break on that note. We'll come back on the other side and get you more stock-specific action. Welcome back. Well, actually, at the headline index level, the mid-cap index today is showing you a lot of underperformance because the cut there is almost 0.5% now, and that looks much worse off compared to the Nifty or even the Bank Nifty. That's the mid-cap index. However, individual stocks are still flying around. Olectra Green Tech, absolutely no stopping this stock. Even on a day like today, it's up another 5-6%. You're seeing some buying on NCC, 5% higher. And then Network 18 and TV18, the companies that own and operate the channel that you're watching. A lot of buying in that space as well today. So individual stock action continues. But at the headline level, the Nifty is not making much headway. Well, it is earnings season. Yesterday, we told you all about the expectations from the IT sector. And today, it is all about FMCG. It is time for a special segment, Quarter Se Quarter Tak, where we bring you expectations sector by sector on a daily basis. And today we've got Mangalam now, who's moved over to the wall to talk about what perhaps the FMCG universe could deliver in the December quarter. Mangalam.
Well, as far as the December quarter is concerned, usually seasonally the strongest quarter for the consumer sector. And if you just take a look at the way the consumer stocks have been, there has been stark divergence. The K-shaped recovery that everyone's been talking about, right? Titan up 50%, Tata Consumer up 45%, ITC, Nestle up 38 odd percent. They've been outperformers in the space, largely because of their urban focus. We've seen decent gains come by for the likes of GCPL, etc., on account of the inorganic foray that they made with, Park Avenue as well. So if you look at that part of the market, that's doing well. But now if you move to the rural-focused, more staples kind of market, that hasn't done well. HUL is down 1.5% in the last 12 months. Colgate up just 2%. So we have underperformers and outperformers. So what is it that we're expecting in the third quarter? One, gradual recovery owing to the festive season. So that's something that everyone will be watching out for. The second thing is mid-single-digit volume growth for the entire FMCG pack. The third thing that you'll be watching out for, of course, will be, how urban and discretionary consumption continues to thrive and rural continues to lag, and there has been a problem in the mass market staples business itself. And finally, just keep an eye on a couple of other things as well. Price correction post-commodity prices cooling off would weigh on the revenue reportage of all these companies. And finally, we'll watch out for gross margins expansion, but at the same time, regional competition has come up as well, and as a result of which, ad spends have been ramped up. What are the updates telling you so far? Titan, 23% jump in their jewelry biz. Again, that's telling you the discretionary demand is doing a lot better. Avenue Supermarts saw a 17% jump in their standalone revenue, but a lot lower than their 4-year average itself. Again, mass consumption under a wee bit of pressure. We've had mid to high single-digit growth come in for Dabur. For both GCPL as well as Marico, the revenue decline will be in low single digits as well, for different reasons, but nevertheless, decline is what we're seeing in the top line. What is the street working with? Asian Paints, 7 to 8% revenue growth. Nestle, 10 to 12%, likely to be an outperformer there. Tata Consumer as well, 7 to 8%. So most of these companies will have mid to high single-digit sort of revenue growth, but the EBITDA growth will be a lot higher. Even then, for HUL, it'll be middling at around 5 to 6%. What are the important things to watch out for apart from the numbers? You have to watch out for a couple of these likely outperformers. United Breweries, the management joined us, said that margin expansion, volume uptick is likely. Honasa Consumer, margin uptick is likely. Trent has been doing well. And Jyoti Labs, the last 3 or 4 quarters, it has been outperforming the industry. So these are a bunch of stocks that will be likely outperformers. And apart from that, management commentary on demand revival, regional competition, M&A activity, and margin expansion will be crucial. Valuations never been cheap in the FMCG space, but now they look relatively better given the run-up that we've seen in the other packs. But then ahead of elections, how does demand pan out, and rural recovery is key to watch out for.
Okay, all right, Mangalam, thank you very much. You come on over and join us in the conversation. Let's put some questions to Vishal Gutka, AVP Consumer and Media at Phillip Capital, and talk about really what lies ahead. Vishal, thanks very much for joining in, and I'm sure you were hearing the wrap that Mangalam brought in. And I'll straight away get to the question that, it's like, ye dil mange more. Market wants more from FMCG companies. This middling, mid-single-digit growth, that's clearly not enough to inspire a bigger move in stocks given the valuations. What do you see ahead for the FMCG pack? I mean, December quarter and then, onwards this year.
Yeah, so good morning, first of all, and wishing you Happy New Year's to all your viewers. What we believe that for next 1 year, things are likely to slow down further rather than seeing an uptick. What are we seeing on the ground is that rural demand continues to be under stress. There is no meaningful signs of recovery out over here. All the people in the ecosystem, right from the consumer till distributor, is into some kind of pain. In this context, what we are seeing is that regional brands per se are doing much better than national brands because they are fulfilling what is required from the end of customer as well as what is required from the end of mom and pop stores. Customers at this point of time require benefit in form of lower prices, lower SKUs, or they require higher credit periods. That is generally met by this regional brands. And when you see from the context of retailers, they require higher margins and higher credit periods. Regional brands are in a much better position to provide that benefit. So what we believe that, and the data that is what is coming up with regards to rabi sowing and water reservoir levels, that is also not very encouraging. So what we believe that a lot of funds are moving towards election funding now. There's already liquidity squeeze in the market. Till 1Q25, we don't see any meaningful recovery happening, at least in the FMG pack per se. Then second quarter, then we'll have a Kharif season and the normal monsoon. If it plays out well, then the recovery that could happen in a very meaningful manner, that could happen in second half 25 for the second half of 25 onwards, we could see a decent recovery happening in the stocks.
So would it make more sense to now look at FMCG stocks individually and what they're doing in a particular market rather than painting a broad brush across all the FMCG space? Because in the space itself, the larger players have underperformed, whereas regional specific players or category specific players have done really well. Case in point, you had Varun Beverages that outperformed, you have Jyoti Labs and the regional players doing well. Then you had a lot of these, other players that have done a lot better, Honasa, for instance. So category leaders and region leaders are the way to go, according to you?
Yeah. So we would like to have a bottoms-up approach rather than going top-down approach. So companies which are investing to category development or there's a category-led tailwinds, like companies we highlighted, Jyoti Labs, or there's been a management change where the management is very, very aggressive towards category development, case of GCPL. Those companies continue to do well. I think they will continue to outperform the overall index. Index might remain subdued for a year, my kind of time frame, because large cap, where the ITC, the weightage is very high, the stock might remain sideways till the next budget is announced. I think that budget will come post the new government is sworn in somewhere around the month of June. So I think the stock, the index might remain sideways, but stock specific, I think it could continue to do well. So Honasa, where it is showing much better growth rates in the BPC category than HUL, what we are seeing over the past few quarters.
Okay, all right. Hi, Vishal. Good to have you in the studio. You know, for FMCG companies, some of them have given us a cheat sheet. Given by what you have seen, who do you think is best placed for the current quarter, you know, in terms of maybe a relative outperformance coming in?
Sure. So in case the food companies continue to do very better than beauty and personal or HPC companies. So Nestle and Tata Consumer continue to outperform on that basket. Jyoti Labs has been doing excellence in terms of execution, in terms of their distribution ramp up. So they are doing very well on that front. Market share gains has been across the board in most of their categories. So these are a few of the companies that do much better. On the jewelry side, I think Titan is one of the companies which should report very, very strong numbers. Formalization story continues to pan out over there. I think they are reporting better numbers out over there. So there are a few companies, jewelry space is looking good, and within consumer basket, I think Jyoti Labs and food companies might report better number during the quarter.
So your top buys would be, as of now?
So top buys for us, from a medium term perspective, is Gujarat Consumer in the mid cap space, and in large cap space, we continue like Nestle and ITC.
All right. And your views on paint sector? Because so much happening out there. Crude prices are down, but so much competition likely to come as well.
Sure. So paint near-term numbers are looking pretty good. I think couple of quarters are likely to be. Grasim launch, which was supposed to happen in the month of Feb-March, based upon the channel checks, is suggesting it might get postponed to April and May, because their thought process is that they want to launch on a pan-India basis rather than launch in a specific region. So I think there's going to be a lot of noise in this sector. Although the competitor might not be able to gain meaningful share from market leader, but there's going to be a lot of noise that could lead to time correction happening in the paint stocks as a whole.
Okay. All right. Vishal, we'll leave it on that note. Thank you very much for joining in and giving us a nice wrap of how the season might play out. And we look forward to more conversations as we get.
Thank you. Thank you so much for having me over here. Thank you.
Thank you. Thank you for coming. Well, with that, we do have to, take a break. Leaving the markets just about 15 points lower. The Nifty is trying to hold its all-important 21,500 range. We'll take that break. Come back on the other side with our Outlook 2024 segment. Lata will connect with B. Prasanna, head of Global Markets Group of ICICI Bank, to put focus on bonds and the rupee market. Stay tuned.
Co-powered by